Hi everyone, welcome back to the another video of this chapter. Today in this video, we are going to discuss the adjustment part of the valuation goodwill. In previous video, we have already learned all the three methods of calculating the goodwill. In this video, we will do the adjustment part. So first of all, we have to understand that what type of adjustment will come in this chapter. Here we have taken the examples of the adjustment. See here, adjustment of profit or loss or any other expense it may be given any type of abnormal loss in the sense all those losses which has not been expected. These losses are abnormal loss. Just for example, loss of fire, loss of theft, like this. It means any type of abnormal losses will be added to the profit or loss amount whichever is given. Now, loss on sale of fixed asset. While you are selling the fixed asset and you are getting any loss, then loss on sale of fixed asset will also be added here. Overvaluation of opening stock or undervaluation of closing stock. If you have given the stock of opening and closing balance, then you have to check in adjustment part what is mentioned, overvaluation or undervaluation. If overvaluation of opening stock or undervaluation of closing stock, it will be added here. Non-recurring expenses. Non-recurring expenses means all those expenses which has not been expected in future. Then capital expenditure charged as revenue expenditure. Suppose you have charged any capital expenditure as a revenue expenditure, just like you are purchasing machinery and you are treating this machinery amount as a revenue expenditure, then this amount of machinery will also be added here. And next, what would be less here? First of all, we will less here abnormal gain or gain on sale of fixed asset, then over valuation of closing stock or undervaluation of opening stock, then non-recurring incomes, income from non-trade investment, management cost if any, suppose any partner is getting remuneration given here or if not deducted from the profit, then we will deduct it. And any future expenses like insurance premium is given, then we will have to also deduct this from the given profit or loss. Now we will understand with the help of an example how to do the adjustment part. Okay, see here. This is an example. Here are two partners A and B. Capital employed is given here rupees 10 lakh. Net profit or loss for the years, uh, past 3 years is given here. 2020 1 lakh 60,000, 2021 1 lakh 40,000, 2022 270,000, like this. And normal rate of return is 11%. Remuneration of each partner for his service to be treated as charged on profit rupees 2500 per month. Assets is given here excluding goodwill 11 lakh. Liabilities is also given here 1 lakh. Now we have to calculate the value of goodwill through all the methods. And number of year purchase, suppose number of year purchase is assumed that this is 3 years. They are purchasing goodwill for the 3 years. Now we have to apply all the methods for calculating the goodwill. Okay, see here. First of all, we will use the method which is average profit method. What was the rule of average profit method? Under the average profit method, first of all, we have to calculate the average profit. So we will calculate the average profit. Average profit. How much will be the average profit? 160 or plus 140. Here it is 3 lakh plus 270, 5 lakh 70,000 and divided by 3. It means 1 lakh 90,000 is the average profit. But here is an adjustment of remuneration. We have discussed here the adjustment part, management cost or partner's remuneration. If not deducted, then it will be less from the profit part. So here remuneration is given 2500 per month each partner. Each partner in the sense both the partner will get remuneration. So we have to calculate the average normal profit. How much? Average normal 190,000 minus 2,500 into 2 into 12, because this is monthly. We have to convert it into the year. Here are two partners, so we are multiplying by 2. What would be the amount here? Amount would be here 60,000. 190 minus 60. It means now your average profit is how much? 130,000. Now you have the formula for calculating the goodwill, which is goodwill is equal to average profit into number of year purchase. Your average profit is 130,000, and for number of year purchase you are purchasing for 3 years. So we will write here 3,90,000 will be the value of goodwill under the average profit method. Now come to the another method, which was super profit method. If we talk about the second method, super profit method, then first of all we have to calculate the super profit. And what was the formula of super profit? Average profit minus normal profit. Average profit we have already get here 130,000. This is our average profit. So we have to calculate here normal profit. And what was the formula of normal profit? Normal profit is equal to capital employed into normal rate of return upon 100. Here capital employed is given how much? Capital employed is given here 10 lakh. So we will write here 10 lakh. Normal rate of return is here 11% is given in question upon 100. It means 1,10,000 would be the normal profit. Your average profit is 130 and normal profit is 1,10,000. So now you will calculate the super profit. What will be the super profit? Average profit 130 minus normal profit 110. Then it would be 20,000. Now you have to calculate the value of goodwill. What would be the formula? Super profit into number of year purchase. Here super profit is 20,000. For 3 years we are purchasing the goodwill. Then it would be 60,000 will be the value of goodwill through the super profit method. Now come to the capitalization method, third method. Under the capitalization method, there were two methods. First one was capitalization of average profit and second was capitalization of super profit. So first of all, we will calculate through the capitalization of average profit. Capitalization of average profit method. What would be the formula? First of all, we have to calculate the capitalized value of business. So we will calculate here capitalized value of business. What would be the capitalized value of business? Average profit into 100 upon normal rate of return. Your average profit is how much? 130,000 into 100 upon normal rate of return. What is your normal rate of return is 11. Then how much would be here? Your average profit 11 lakh 81,818.88. This will be your capitalized value of business. Now we have to calculate the value of net asset. Net asset is equal to total asset excluding goodwill minus outside liabilities. In question, total asset is given here. How much the total asset? 11 lakh excluding goodwill minus outside liabilities 1 lakh. It means your net asset would be 11 lakh minus 1 lakh. 10 lakh would be your net asset. Now you have to calculate the value of goodwill. What formula we will use for calculating the goodwill? Goodwill is equal to capitalized value of business minus net asset. Capitalized value of business is 11 lakh 81,818 minus 10 lakh. 1 lakh 81,818 will be the value of goodwill. Now come to the last method, which is which was capitalization of super profit. What formula we will use for calculating the goodwill? Goodwill is equal to super profit into 100 upon normal rate of return. Super profit we have already calculated above. See here, what was the value of super profit? This was the value of super profit 20,000. So we will write here 20,000 into 100 upon normal rate of return was 11. If you will calculate this, then the final value will be 1,81,880. This is all about the calculation of goodwill